Good morning, everyone. Welcome to New Hampshire Insurance Department's annual hearing on premiums and the insurance market. Our hearing is an opportunity to present the findings from data submitted to the department and to host a public forum. This has been a difficult year for a lot of reasons. In April, Health Management Associates published a report that projected a loss of over 100,000 lives from the employer-sponsored coverage in New Hampshire. The model's high estimates for COVID-related coverage losses range to 163,000 covered lives. Although it may take some time to fully understand the impact of the virus on the economy, I'm very happy to say those losses have not taken place. There are a few housekeeping items. All participants have been muted to preserve the quality of the audio during this hearing. And this webinar is being recorded and will be available on our website next week. You can use the question feature in the webinar pop-up window to submit questions or comments. If you need to minimize the pop-up window to the webinar, click the orange arrow button. I'd like to recognize the staff from the department who played a key role in setting up this hearing today. Tyler Brannon, Maureen Mustard, Ariane Sibley, David Skye, and Karen McAllister. I'd also like to recognize our Gorman actuarial partners, including Jen Smagnula, Don Gorman, Bella Gorman, Danielle DeCenzo, and Linda Keene. We have sent people who've registered for the hearing a link to the preliminary report. The report, as well as a two-page summary, are available on our website. A final report will be released in early December. There are a couple of changes to the format this year. In addition to holding this hearing virtually, we have coordinated with Senator Feltus and the Commission on the Status of Health Coverage Markets for individuals and small employers. Instead of a carrier panel at this hearing, the carriers will participate in a similar discussion with the Commission at 1 o'clock. A link to that meeting was included with the hearing agenda and is also available in the Senate calendar. This morning, we'll hear first from Jen Smagnula, representing Gorman Actuarial, followed by a presentation titled Moving Forward on Provider Alternative Payment Systems, given by Professor Paul Ginsberg. We are very fortunate to have Professor Ginsberg with us today. During the years, Professor Ginsberg was president of the Center for Studying Health System Change. He was closely following the price transparency efforts here in New Hampshire, and the Center produced 2 reports on the impact of the department's efforts. Today, Professor Ginsberg is the Leonard Schaefer Chair of Health Policy Studies at the Brookings Institute and directs the USC Brookings Schaefer Initiative for Health Policy. He's also a professor of health policy at the Sol Price School of Public Policy, the University of Southern California, and serves as director of public policy at the USC Schaefer Center for Health Policy and Economics. Since 2016, he has served as commissioner on the Medicare Payment Advisory Commission, MedPAC, and in 2019 was appointed vice chair. His full bio was sent to you in the agenda. The hearing will conclude with public comment period. Our presenters will take questions, but please hold on to your more general comments until that time. I would now like to introduce Jen Smagnula, who will present the annual hearing findings. If you have any questions, please submit them in the text box to our meeting panelists, and we'll ask those questions at the conclusion of the presentation. Jen?
Thank you very much. I'm going to share my screen. All right, well, thank you. I'm Jen Smagnula. I'm a healthcare actuary working with Gorman Actuarial, and I'm joined today virtually with my colleagues, Don Gorman, Linda Keene, and Danielle DeCenzo. And I'm going to take you through this, our presentation on the key findings from our 2019 preliminary report on New Hampshire's healthcare premiums and claim cost drivers. So the goal of this report and presentation is to examine health insurer premium and claim costs and the factors contributing to changes in those costs. And this year's focus is on 2019, but I'll also be presenting some of the available information we have from 2020. So the uninsured rate in New Hampshire, shown in red, increased slightly from 2018 to 2019, but the changes were within the margin of error. So the current uninsured rate in New Hampshire in 2019 is 6.3%. The United States average uninsured rate, which is shown in black, also increased slightly from 8.9% to 9.2%. Now, since 2013, the uninsured rate in New Hampshire has decreased about 4.4 percentage points from a high of 10.7% back in 2013, prior to the implementation of the Affordable Care Act, to its current rate at 6.3. And during that same time, the United States uninsured rate experienced a similar decrease, dropping from 14.5% to 9.2%. And this chart also shows the other New England states. And when comparing New Hampshire to the other New England states, their uninsured rate is roughly in the middle, with Massachusetts having the lowest uninsured rate at 3% and Maine having the highest at 8%. And similar to New Hampshire, some of the other New England states saw either stayed flat or saw very slight increases. And the other states that increased slightly were Connecticut, Massachusetts, and Vermont. So now we have an overview of where New Hampshire residents received their health insurance in 2019. And this is based on information collected from the American Community Survey. So as we reviewed in the previous slide, the uninsured rate in New Hampshire is 6.3, or around 6%, which is shown in orange. So of the 1,343,000 New Hampshire residents, this means that approximately 84,000 residents do not have health insurance in New Hampshire. Approximately 61% of New Hampshire residents receive health insurance through the private and commercial market, either by purchasing coverage on their own through the individual market, so the 6%, or obtaining it through their employer, so 55%. Now, Medicare is the next highest coverage category at 15%, shown in the dark red, followed by Medicaid in green at 10%. So the percentage of residents with Medicare increased slightly from last year, from 14% last year to 15%. And the percentage of residents with Medicaid has remained pretty steady at 10% over the past couple of years. These next couple slides compare the New Hampshire average premium to the average from other New England states and to the US average. So this first slide looks at the individual market, and this is using publicly available data from the CMS risk adjustment reports. So average premiums in the individual market in New Hampshire did decrease significantly, so going from the 613 down to the 544. And this is driven by the transition of the New Hampshire Premium Assistance Program enrollees, so the Medicaid expansion population. They transition from obtaining their health insurance coverage through qualified health plans on the exchange in the individual market to, in 2019, that transitioned out, and they are now receiving care through the Medicaid care management plans. Now, across the United States, shown in red, average premiums actually stayed pretty flat. There was very little change. And when comparing New Hampshire to the average from New England states, we see that the New England states did also see a slight decrease, and New Hampshire remains, their average premiums remain below the average from the New England states. And just to note that Massachusetts and Vermont are not included in the New England average, as they have merged individual and small group markets. So it's not really comparable. So this chart takes that same data that was shown in the previous slide and shows the New Hampshire average premium in red, and it compares it and ranks it to other states. So as you can see, New Hampshire's average premiums rank about the 15th lowest in the country. And when we look at this every year, but when we last presented this back in 2015, New Hampshire had the 18th highest premiums across the country. So New Hampshire's rank has jumped around a little bit from year to year, but it's generally been improving over time. Now this slide uses that same data from the CMS risk adjustment reports, but now we're looking at the small group market. So the small group market in New Hampshire, the blue bar, remains close to the average premiums in the United States, which is the red line. So average premiums in both New Hampshire and the United States increased about 3 to 4% from 18 to 2019. Now, when you look at the average from the other New England states, we saw that they increased about 6% during the same time period. But whether it's New Hampshire or the New England average or the United States, the average changes we saw this year were all lower than what was experienced in the prior year. Now turning to the small group market and how New Hampshire ranks. So in 2019, New Hampshire's average premium ranked as the 17th highest in the country. And when we last presented this back in 2015, New Hampshire ranked as the 10th highest. So we have also seen some improvements as well in the small group market over time. Now this slide compares large group average single premiums in New Hampshire to the United States average and other New England states. So the CMS risk adjustment program doesn't apply to the large group market, so we don't have that same data set available to analyze here. So here we're using medical expenditure panel survey data, or MEPS. So the United States average again is shown in black and New Hampshire is shown in red. And you can see the other New England states in the other colors. So this shows that in the large group market, New Hampshire average premiums are consistently higher than the US average premium. And when compared to other New England states, New Hampshire's position does change over time, but currently they're on the lower end when compared to other New England states. And just note that the average premium show here include both the employer and the employee portion of the premiums. So now we're going to move on to talking about some coverage shifts. And by coverage shifts, we mean that we're looking at the shifts in health insurance enrollment by market segment, by insurer, and then overall. So this slide gives an overview of New Hampshire Citus commercial insurance markets from 2016 to 2019. So by New Hampshire Citus, we mean that New Hampshire has jurisdiction over the policy, which in turn typically means that the employer is headquartered in New Hampshire. And by commercial, we mean that these people are purchasing their insurance on their own, or they're receiving coverage through a New Hampshire employer. So on the left-hand side, the gray bars, we show the proportion of membership that's within each of the commercial market segments in 2019. So similar to prior years, the majority of commercial coverage is purchased through their employer. So either small group, large group fully insured, or large group self-insured. And note that about half of the commercial market is obtaining their coverage through a large group self-insured arrangement. Now the right-hand side in color shows the enrollment by market segment for each of the past 4 years. So we start off looking at the top in the individual market. We can see that there was a drop in membership going from 2017 to 2018. And then looking ahead to 19, there's really very little change, just a slight decrease. In the small group market, we also see a slight decrease. And similarly, in the large group market, we see a slight decrease going from 18 to 19. And then on the other hand, in the large group self-insured market, we see a slight increase going from 18 to 19. But overall, when we step back and look at this, there's generally little change going from 18 to 19 as far as membership. So this slide now drills into the small group market membership from 2017 to 2019 by insurer. And in order to take a closer look at this, I'm going to actually switch over to our tables in Tableau. Our team has been working with the NHID to add some of the data from the annual hearing reports into Tableau. And in the next couple days, those are going to be available on the NHID's website. And our goal is to just make the data even more accessible and user-friendly. And we started with these membership charts. So in Tableau, so I'm starting here. You can see, so this is all membership data from 2016 to 2019. And you can see you can choose on which segment you would like to look at. We start with that we can look at the premium assistance program, the individual market, small group, large group insured, large group self-insured. So focusing on the small group market for a minute and looking at the membership for Tufts Health Freedom Plan, which is shown in purple, we can see that back in 2017, they had about 5% market share. And then going forward to 2000, going forward to 2000, let me just click again. Going forward to 2018, they have 15% market share. And then into 2019, they've grown further and they have about 21% market share. And during the same time, if we click back, we can see in blue how Anthem Matthew Thornton's market share has decreased slightly over time, while similarly Harvard Pilgrim's market share has also decreased slightly over time. The other market segment I'm going to take a quick look at while we're here is the individual market, now excluding New Hampshire, the New Hampshire PAP population. So back in 2017, for example, Ambetter had very little presence in this segment. This is again is excluding the PAP population. But as you move forward through the years, you can see how Ambetter in orange has increased their market share. And in 2019, they're currently at 22%. And then Anthem, on the other hand, Anthem Matthew Thornton. So back in 2017, they had 42% market share. In 2018, they grew significantly because this was the year Minuteman left the market and Anthem Matthew Thornton picked up a lot of that membership. But going into 2019, it has decreased again while Ambetter has grown. So you can see, once this is up on the website, you can click around to different market segments and different years and get to analyze the membership. So going back to the presentation, the slides. So up to this point, we've been looking at data through 2019, but this slide now compares fully insured membership from April 2019 to April 2020. So it's our first really early view into the time period that is starting to be impacted by the COVID-19 pandemic. So when we're looking here, we really only see very small changes in enrollment in these markets. In the large groups fully insured segment, we really see no change. Same with the individual market, we see no change. In the small group market, we do see a slight decrease in members going from 68,000 to 65,000. So this slide shows some further enrollment data for the individual and small group markets. So through the annual hearing collection process, membership is typically collected as of April and December of each year. So this year we also collected membership as of July 2019 and July 2020 to try to understand any early impacts on membership due to COVID-19. And each dot in this chart represents a data point where membership was collected. So the small group markets shown in red and the individual markets shown in blue. So looking at the small group market first, so starting back in December of 15 through July 2020, small group enrollment has declined about 12%. And we can see it's been a fairly gradual decrease over this time. And then when you look at December 19 to July 2020, we see that continued gradual decrease. So it's really hard to say if this decrease here is really due to COVID. It would really seem that it's more part of the gradual decline that's been happening in this market. And when looking at the individual market, you can see how it's much more volatile, the membership at different points in time. And what we usually see in a typical year is that there's decreases from the beginning of the year to the end of the calendar year. So for instance, here in April 16, where it was at 65,000, and then it drops to 58,000 in December 16. And again, in April 18, the membership's at 53, dropping to 45,000 in December 18. And when we look at April 19 to July 19 a year ago, again, we see that kind of gradual decrease throughout the calendar year. Now we jump ahead to April 2020 to July 2020, and the membership has actually stayed flat. So it would seem like perhaps, as a result of COVID, the membership is more sticky, if you will. So members that would typically slowly disenroll throughout the year, perhaps are holding on to their coverage, and perhaps that's related to the pandemic. But obviously this type of membership will be important to continue to track as we get further into the year and into 2021. So consistent with what we just looked at on the individual and small group market slides, we also collect this information on the large group slide. And we typically do that as of April and December, but we also collected it this year as of July 19 and July 2020. So the line shown in blue is the self-insured membership, and the line in red is the large group fully insured. So the self-insured, when this data is from April 18 to July 2020. So on the self-insured side, we saw an increase of about 8,000 members over this time period. And on the large group side, we saw a decrease of about 6,000 members. But you can see it's been fairly steady. And then when looking into 2020, there's really no significant change. So now this table compares New Hampshire commercial situs enrollment and New Hampshire Medicaid full enrollment from December 2018 to July 2020. And again, by New Hampshire situs, we mean that these are employers who are based in New Hampshire, but their employees may live in states outside of New Hampshire. And this total commercial enrollment is a combination of the 4 segments we just looked at in the past couple slides. So individual, small group, large group, and then the self-insured side. So we can see on the commercial, when you add it all up, there's really not any significant changes as we look into early 2020. Now on the Medicaid side, between December 2019 and July 2020, we can see that the membership grew by about 18,000 enrollees. September 2020 enrollment was also recently posted along with August on the New Hampshire Health and Human Services website, and that shows continued growth. And as of September, the full Medicaid enrollment's up to 202,000 enrollees, so another additional 6,000 on top of the 18,000. So looking at this data, we've wondered, where is the Medicaid enrollment coming from if we're not seeing any large changes on the commercial side? So one idea is that the commercial enrollment we're looking at is, again, based on New Hampshire situs, not New Hampshire residents. Versus this Medicaid enrollment, these are all New Hampshire residents. So we know there's a large number of New Hampshire residents who work for Massachusetts employers, and that the Massachusetts unemployment rate is very high right now. They're around the 7th highest in the country as of September. So one possible explanation is that there are New Hampshire residents who work for Massachusetts employers who have lost their health insurance coverage and now qualify for Medicaid. So they're not showing up here because they work for Massachusetts employers, but they are going to show up here. Another plausible explanation is that in many states, HHS has not been redetermining people since the start of the pandemic, So we might only be seeing growth in the Medicaid population and not the disenrollments that would happen in a typical year. So this kind of data is being tracked closely across the country in addition to looking at unemployment rates. And there were recent articles in Health Affairs and the Kaiser Family Foundation looking at this type of data. So it's definitely something that, I think both New Hampshire and across the country is going to be looked at closely over the next several months and into 2021. So this chart returns to showing membership as of April 2020. And we just think it's a good chart to demonstrate the diversity of the individual market in its different segments. So overall membership as of April 2020 in the individual markets at 51,000. And on the left side, we show the 10,000 who do not purchase their insurance through the exchange. So it's about 20% of this population. Within the non-exchange population, about 4,000 of those members are part of this grandfathered transitional population, and those folks are not part of the single risk pool rating requirements of the ACA. It's a closed block and it's slowly shrinking over time. Now on the right side, we have the membership that's coming through the exchange. So of the 42,000 members on the exchange, many are getting subsidies either in the form of cost sharing reduction subsidies or federal premium subsidies. So in New Hampshire, about 15,000 members are getting both cost sharing reduction and federal premium subsidies, and 14,000 are just getting the federal premium subsidies. The remaining 13,000 on the exchange are not getting any type of premium subsidies. And the membership outlined in green just represents those who are getting some type of subsidies versus the membership in blue who are not getting any type of subsidies. So this slide gives another view of the changes in membership from 18, 19, and 2020. So for membership in the individual market single risk pool, or this includes everything in the individual market single risk pool except for that grandfathered transitional segment we looked at on the previous slide. And consistent with the previous slide, anything shown in green means that that's a segment receiving some type of subsidies, and the segments shown in blue are not receiving a subsidy. In 2020, about 60% of the individual market single risk pool received some types of subsidy towards their health insurance, so the 15,000 and the 14,000. Now, if you were only to focus on the exchange membership, so the dark blue and the two greens, that translates to 69% of members receiving some type of subsidies. So as you can see, there hasn't been drastic changes from 19 to 2020, but we have seen some slight decreases in those receiving subsidies and slight increases in those not receiving subsidies in blue. This slide takes the New Hampshire individual market exchange membership and examines metal levels in 2018, 2019, and 2020. The metal level represents a plan's actuarial value or benefit richness. So generally the bronze plans, which are shown in the orange, they will have lower premiums, but they're less rich plans compared to the silver and gold, which have higher premiums, but they're more rich. There's less cost sharing. So when we look at this over time, we can see there is membership shifting away from the silver with CSR, which is shown in green, and then the silver with no type of CSR, which is shown in gray. And then on the flip side, we see the bronze category increasing over time, going from 32% in 2018 up to 41% in 2020. So with the silver membership with CSR decreasing, the bronze increasing. So some of these members who are eligible for CSR may be choosing to forego their CSR subsidies and purchasing a bronze plans that will they'll be very low or even zero premium for those people. Now the membership in gold, it's fairly small and it's been pretty steady between 5 to 6%. And the other note, this doesn't include the membership that's on the catastrophic plans, but that's fairly small. There's less than 2% of members in catastrophic plans on the exchange in any one of these years. We also track changes in age over time. So this chart shows the average age by year and market segment. So you can see that the individual market, they are several years older than the other segments. And within the individual market, we saw that average age increase significantly going from 2018 to 2019. And that's really due to the transition of the New Hampshire population. That Medicaid expansion population, even though their healthcare needs are higher, their healthcare costs are generally higher, they're actually a younger population. So when they get pulled out, it brings up the average age of the individual market. And you can also see when you look at the small group markets, it's been fairly stable over time. And there's not huge differences between these segments, although the self-insured population is a little bit younger. So now we transition to looking at membership by type of provider risk contract. And we're looking at this for the fully insured members in New Hampshire from 2015 to 2019. And we're looking at this in two ways. So membership and contracts that have both upside and downside risks shown in red, and then membership and contracts with only upside risks shown in blue. So a provider contract with upside and downside risk is defined as a contract where the provider will share in any budget surplus, but also share in the deficit with the insurer. So an example of this type of contract is a capitation arrangement. Now, upside only contracts are where the provider will only share in a budget surplus, but they're not at risk for any of the budget deficit. An example of this is a shared savings program. So within the fully insured market, the percentage of members in risk contracts with both upside and downside, which again is shown in red, has increased from about 13% to 30% during this time frame. And on the flip side, the membership and upside only has gone from 35 to 27%. And when you look at this combined, you can see that about 50% of the total membership is in has a provider in a contract with some type of risk sharing arrangement. So not shown here, but shown in the report, we also looked at the percentage members who are self-insured in these types of risk contracts. And there we saw, when we looked at the upside and downside, we see that also increased, but the levels are just lower. So it went from 6% in 2015 to 19% in 2019. And then similar to what we saw on the fully insured side, the membership and the upside only has come down slightly from 38% to 32%. So in light of COVID-19, this is an interesting metric to consider because as there was that very significant decline in services during the pandemic and during the shutdown, this has prompted many provider groups across the country to really reconsider what their financial arrangement is and what type of model they're in with their insurers, especially so thinking about ones that are paid on a capitated basis where they would be receiving some type of revenue every month regardless of what type of utilization was happening versus a fee-for-service arrangement where the provider's only getting paid if they're actually performing services. So this slide gives a picture of what has happened to premiums in New Hampshire over the last 3 years. So this is another set of data that we have added into the Tableau that will be on the NHID's website. So I'm going to click over to Tableau one more time. All right, so this is showing average premiums by market segment for the past couple years: individual, small group, large group, and then total fully insured. So we can see, so in 2019, the overall premiums actually decreased slightly. They decreased 1%, and that was followed from the prior year, where we saw a very large increase in premiums, about 16.5%. And a lot of that is driven by what's happening on the individual market side. So in 2019, we saw this large premium decrease of 11.6%. And that, again, is driven in large part by the transition of the New Hampshire PAP population out of this segment. Now, the prior year, we saw a very large increase of 43.9%. So we're going to dig into that a little bit more on the next slide. Now, when we look at the small group and large group, we can see in both cases, premium trends have come down compared to where they were the prior year. So small group went from 5.7 down to 4.3, and large group went from 6.3 down to 4.1. And based on the 2019 Employer Benefit Survey from the Kaiser Family Foundation, in 2019, average premiums across the country increased about 4% for single coverage and 5% for group coverage. So what we're seeing in New Hampshire, this roughly 4%, is very much in line with what was seen nationally. So this next slide, which is also the data's in Tableau, looks at the premiums and premium trends for the different markets within the different segments within the individual market. So this data is shown prior to any federal APTC subsidies. So as we just saw, the individual market premiums decreased 11.6% overall in 2019, which was significantly lower than the prior years. So the high increases that we saw back in 2018, they were due to a couple different things going on at that time. So one, the closure of Minuteman, which happened at the end of 2017, which was New Hampshire's lower costing option at the time. Now, the other thing that was happening in 2018 was the silver loading that occurred due to the loss of CSR subsidies. So that only impacted the exchange premiums, not the non-exchange premiums. And there was also just a lot of general uncertainty at the time the 2018 premiums were being set. So that work was done in the spring and summer of 2017. So at that time, there was the talk of the elimination of the CSR subsidies and the elimination of the individual mandate. So all those factors really played into the high premium increases in 2018. But now when looking at 2019, all of that's changed. And then again, in addition, we have this New Hampshire PAP population transitioning out of this segment and into Medicaid care management. So that's really driving a lot of the big decreases you're seeing in both the exchange and non-exchange segments. Now, this grandfathered transitional population, you can see their premiums have been steadily increasing this each year. So in 2019, they're seeing a 10.4% increase. So this is a pretty small segment, and they are not rated as part along with these groups. So they're rated on their own. So they're not impacted by what happened with the New Hampshire PAP program transitioning out. So they're a small and a shrinking block over time. Okay, we're going to transition back to the slides. Okay, so now we're looking at average deductibles within the New Hampshire market. So on the very left-hand side, we have the individual CSR population. So again, these are the folks that the low-income folks that qualify for CSR or cost-sharing reduction subsidies. Those subsidies allow them to be in plans that have much lower deductibles, co-pays, and co-insurance while still paying a fairly low premium. So these members have an average deductible about $1,158. So this is much lower, as you can see, than the average deductible for those who are not getting any type of cost sharing reduction subsidies. So the 4,828, it's over 4 times as much as what the deductible is for the CSR folks. Now, after increasing significantly from 2017 to 2018, we can see that the deductible levels actually stayed fairly flat from 2019. And this really ties into the premium trends we were just looking at. So back in 2018, where there were those really high premium trends, folks on the individual market were really forced to increase their deductible levels in order, or buy down in order to maintain an affordable premium level. But here we are in 2019, where we saw premium decreases. So that generally means that individuals were able to stay in similar plans and not have to buy down and move to less rich plans because they were experiencing premium decreases. And then we have the group segments on the remaining portion of the slide. So you can see each of the group segments, they had fairly small changes in their deductible levels from 18 to 19. And then this also just gives you a sense of how different the individual market who are not getting any type of cost sharing reduction subsidies, how much higher their deductibles are than these segments, and in particular, self-insured segment. So this slide here, we're trying to pull together all of the information from the past couple slides and trying to show the relationship between premiums, which are on the bottom, average premiums, and then benefit richness, which is what's shown here on the vertical side. So the higher the ratio here, the more rich the benefits, and the less a member is paying out of pocket. And each bubble in this chart represents a different market segment. And the segments that are shaded, that represents their position in 2018, versus the segments that are shown in solid represent their position in 2019. So for instance, you can see this New Hampshire PAP population. So they're only showing up in 2018 because they're not part of this commercial market come 2019. But you can see they're very high up on the chart because they have very rich benefits. There's very little cost sharing happening for this Medicaid expansion population. Versus the individual non-CSR, they're very low on the scale because these are folks who are not getting any type of cost sharing reduction subsidies. So they are, they're generally in less rich plans. They're lower on the chart. And then again, going left to right, this also gives you a sense of how average premiums compare. So when comparing, for instance, the individual non-CSR market to the small group market, you can see their premiums are roughly the same. They're lining up pretty well. But on the other hand, the individual non-CSR, they're lower on the chart, so they have less rich benefits than the small group market. And here again, you can see the individual non-CSR from 2018, shifting to the left in 2019 because of those large premium decreases we've been talking about. So up to this point, all the premium information we have looked at was through 2019. So this chart looks at the change in the second lowest cost silver plan in the individual market from 2017 to 2020, and then what is proposed for 2021. So the rate and the rate changes for the second lowest cost silver plan are commonly reported, as this is the plan that represents the benchmark plan in, from which federal premium subsidies or APTCs are calculated. But keep in mind, this only represents one plan, and the insurer offering the second lowest costing silver can change from year to year. So the change in the second lowest cost silver from 2018 to 2019 was minus 15%. Again, you know, we've talked about this. It's a lot of this is driven by the transition of the New Hampshire PAP population. Now going from 2019 to 2020, we can see the rate for this plan has stayed pretty flat. And when we look ahead into 2021, we see a 21% decrease. So the decrease that's happening in 2021 is driven in large part by the new reinsurance program that was just recently approved under the Section 1332 waiver. And this will help the individual market. Now, Kaiser Family Foundation actually just hosted a webinar on Monday discussing how the pandemic might affect health premiums in 2021. And based on what the Kaiser Family Foundation reviewed of all the 2020 rate filings across the country for the ACA exchange, the median rate change they found was about 1.1%, but there was variation. They saw that about half of the rate changes were between minus 3.5% and positive 4.6%. So everything we've been looking at up to this point was related to premiums and cost sharing. So those are the costs that consumers and employers incur directly. But now we're going to turn our attention to looking at allowed claims and utilization. So this is the actual experience that will ultimately feed into the premium development. So trends in the overall fully insured market were lower in 2019 compared to trends in 2018. So in the overall on an allowed claims basis, we saw a trend of 0.7% in 2019 compared to 5.6% in the prior year. So each of these segments saw a decrease in trends when looking at 18 to 19, and we saw the largest change or decrease happening in the individual market, again, in large part due to the transition of the New Hampshire PAP population. So now this chart takes that combined 3.7 small group and large group fully insured trend from the previous slide and breaks it into two components. So utilization and cost and mix. So utilization represents the number of services provided, and unit cost and mix are a combination of the change and the unit price of specific services, but also the change in the mix of services or the change in the mix of providers being used by patients. So when we're breaking into components, we can see the utilization trend has remained fairly level going from 2018 to 2019, while it's the cost and mix trend that has decreased from 4.6% to 2.3%. And when we were digging more into this data and talking to the insurers, it appears that the majority of the decrease that we're seeing is driven by mix. And some of the key drivers of the decrease in mix that were cited by the insurers was a shift away from more expensive inpatient services, more expensive outpatient surgeries, along with higher intensity ER visits. Now, when examining trends over the past couple years, we can see that utilization accounts for about 20% of the trend, and cost and mix account for about 80% of the trend. When we look at this type of data over the past couple years, back to 2011, when we started tracking this type of information, we can see it's consistently the cost and mix that are the majority of the driver of the trend. And this is consistent with what is reported nationally. So now we're looking at the total, total PMPM trends by service category for the group markets. And the percentages shown in the parentheses next to the service category labels show the percentage of total allowed spend that each service category represents. So when looking at the trends by service categories in the group markets, we can see that the outpatient facility trends have decreased from 8.7 to 5.4, And we know that the decrease is driven by both lower utilization trends and lower cost and mix. In this service category represents about 35% of total allowed claim costs. So this category is always a large driver of overall trend. Now, the professional trends have remained fairly unchanged during this time, but when we dig into the details, there was actually an increase in utilization in this category that was offset by lower cost and mix trends. And the pharmacy trends have increased from 18 to 19. They went from 2% to 5.7. So now we're going to take a closer look at that pharmacy trend we were just talking about. And again, this is just in the group markets. So we see the pharmacy trend of 5.7% in 2019. Now, specialty drug trends did increase from 10.6 to 7.6, but you can see their trends are still higher than other categories. So they're still a significant driver of overall trend. And then in addition, specialty drugs continue to contribute more and more to total pharmacy spending. So they currently account for 45% of pharmacy spend in 2019, and that's up from 41% in 2017. The average cost of a specialty script in 2019 is $3,500. Now, when looking at the non-specialty trends, for the past 2 years, we've seen negative trends in these categories, but that has changed and we now see small positive trends for these categories. And it's really driven primarily by cost and mix changes. And insurers cited analgesics, anti-inflammatories, and antipsychotic agents as among the categories of drugs that were driving changes for these non-specialty drugs. Now, the right side of the chart shows the pharmacy drug costs that are covered under the medical benefit. So these includes prescription drugs that are administered in a hospital setting or a physician's office. So in many cases, these are high costing injectables. So the trend for this category was 8.1% this year. Now, when including these pharmacy under the medical benefit costs with the traditional pharmacy, overall trends for these types of drugs is increased 6.4% from 18 to 2019. So throughout this report, the pharmacy information is presented net of prescription drug rebates. So rebates are the amount that are paid to insurers from drug manufacturers, reducing total pharmacy costs. Now, prescription drugs have grown at a faster rate than pharmacy costs, helping to keep pharmacy trends lower than they otherwise would have been. And in 2019, pharmacy trends gross of rebates was about 6.8% compared to 5.7% when you net out rebates. So that's about a 1.1% difference. So this slide also just gives you a sense of how much rebates are. So in 2019, they're worth about $16 PMPM, which represents about 14% of gross pharmacy costs. So now we're going to shift our focus to the allowed claims trends within the individual market. And as we showed previously, overall claims trends in the individual market were lower in 2019 compared to 2018, driven by the transition of the New Hampshire PAP program. And this can also just give you a sense of how much higher the allowed claims PMPMs are for the New Hampshire PAP population than other segments. Now, the non-exchange segment, while it is small, it only represents about 11% of the total market. You can see back in 17, they had a very large trend of about 21%. So this high trend that we saw last year was due to large changes in the population of this non-exchange segment. They lost about 5,000 members from 17 to 18. So that's more than half of that population. And we also know the average age increased during that time for this segment. But now this population, while still small, has somewhat stabilized, and we can see that the negative trends were driven in part by lower costing inpatient admissions. Now the exchange population represents the vast majority of this segment. Their trends are higher than last year, but they still remain pretty low at 3.8%. This bar compares the distribution of members for the individual, small group, and large group fully insured by their annual allowed claim costs. So for example, in the individual market, about 18.3% of members have no claims or had no claims in 2019. And that tracks pretty closely with what was happening in the small group and large group segment. And on the other hand, when you look at the top of the bar, so this represents how many people had claims over 25,000. So in the individual market, it was 4.5%. So a little bit higher than what we were seeing in the group segments. Now, when you look at members who have over $5,000 in claims, so the combination of the purple, teal, and orange, we can see, so this only represents anywhere from 15 to 18% of the membership when you look at these different segments, but they make up about 81 to 83% of total costs. So that type of metric is very similar to what we saw last year. It's really a small percentage of members that drive a large portion of total healthcare spend. So the last two slides in this section present some utilization data by market segment for two key utilization metrics, inpatient admissions and emergency department usage. Inpatient admission trends in 2019 we saw were negative in the individual market. When we exclude the PAP population, they were negative in the small group market, and there was just a slight increase in the large group market. So you can see the individual market, excluding PAP, has utilization levels slightly higher than small group, but very much in line with the large group segment. In this line shown here, we're using it as a benchmark. It's coming from the Healthcare Cost Institute report. The most recent data available there is from 2018. So they're showing across the country admissions on for group or for employers is 52 admits per thousand. So the New Hampshire small group market's tracking lower than that, and New Hampshire large group market's tracking slightly higher. And this also, again, gives you a sense of just how different the New Hampshire PAP population, how much higher their inpatient admission utilization is compared to other segments. And now emergency department usage, very similar information we saw in the individual, small group, and large group. They all were fairly flat or slightly negative. The utilization in New Hampshire is tracking below what is shown nationally at 185 visits per thousand. And here again, you can see in the New Hampshire PAP population how much higher their ED visits usage was compared to these other segments. So this last section, we're going to start by talking about risk adjustment. So the risk adjustment program under the ACA generally redistributes funds from insurers with lower risk or healthier enrollees to insurers with higher risk or sicker enrollees. So health plans who have healthier members will pay money, which is shown in red, and the health plans who generally have sicker members will receive money, which is shown in black. So this is a permanent program that started in 2014, and it's revenue neutral within the New Hampshire individual market and separately within the New Hampshire small group market. So in 2018, Matthew Thornton Health Plan was the payer of about $37.8 million, meaning they generally enrolled healthier members as they had gained a lot of the Minuteman membership once Minuteman closed at the end of 2017. Now in 2019, the total risk adjustment transfers are lower than what we saw in 2019, and that's driven by the transition of the New Hampshire PAP population out of this risk pool. But you can see in 2019, Matthew Thornton continues to be the payer of risk adjustment, and Harvard Pilgrim Healthcare of New England and the Celtic Insurance Company, which is also known in New Hampshire as Ambetter, they are the receivers. So here we show loss ratio information for 2017, 2018, and 2019 in the individual market. So just note, these loss ratios shown here are not the same as the federal medical loss ratios that are used in the MLR rebate calculation, but the data is all coming from the same source. So the 2017 chart excludes Minuteman. And as you can see on the previous slide, and we talked about this last year, Minuteman was expected to pay $39.1 million in risk adjustment to the other insurers back in 17, but that didn't happen because of their closure. So as a result, the risk margin or contribution to surplus for the remaining insurers in this segment was negative. It was negative 3%. Now, insurers calculated premiums for 2018 anticipating a loss of healthier members due to the closure of Minuteman, and there was also a lot of uncertainty at the time that 2018 premiums were being set, which we talked about earlier in the presentation. So based on how these loss ratio results have come in, insurers overestimated the impact of the loss of healthier members, and as a result, their risk margins increased significantly, going from that minus 0.3% to an overall 16%. And then when you look ahead into 2019, we can see that risk margin has come down, but it still remains positive at 10%. So these results have been adjusted to reflect the for the carriers that paid MLR rebates in 2018 and just paid them based on the 2019 data. These results are reflective of those rebate payments, but just note that the MLR rebate formula always uses 3 years of data. So an insurer can still experience a sizable risk margin even after they're paying their rebates because, for instance, in 2018, the rebate formula uses 18, 17, and even 16 experience. Now, on the other hand, going forward, the favorable experience that happened in 2018 is going to influence, or it did influence, the 19 results, and it will continue to influence the 2020 rebate calculation because, again, the formula uses 3 years of experience in the calculation of rebates. So I think these results just overall show the uncertainty in this market, given the volatility that's happening in the loss ratios. So turning to the small group market and risk adjustment, Tufts Health Freedom Plan, which entered the New Hampshire market in 2017, they're going to pay about half of the risk adjustment payments in 2019. And this is a decrease where they paid about 75% of the risk adjustment in the prior year. So, but the total amount distributed in 19 is very similar to 18, the 7.4 versus the 7.8. And there continues to be a much smaller amount of money that's exchanged among the insurers in the small group market compared to what we looked at on the individual side. So the last slide, the last data slide we have looks at the loss ratios for the small group and large group markets. So we can see in the small group market, about 81% of premium is spent on medical and pharmacy claims, and in the large group market, about 84%. The risk margin in the small group market is 3%, so that's a slight increase compared to what we saw last year. It was 1%. And similarly, on the large group side, we're seeing a risk margin of 5%, which is a small increase to what we saw last year at 4%. So before we wrap it all up and take a quick look at some future expectations, this slide summarized some of the key findings that we found in New Hampshire based on this year's report and analysis. So pre-COVID, the markets are looking fairly stable and most of the trends are declining. So, we talked a lot about the individual market. We saw the negative trends primarily due to the New Hampshire PAP transition. There's the new reinsurance program coming into play in 2021 that'll have a favorable impact on premiums for that segment. In the group market, their overall trends were lower in 2019 compared to 2018. Now we do see pharmacy trends increasing from 18 to 19, and specialty drugs are still a key driver, and that is consistent with what is happening on a national basis as well with trends. And then finally, when it comes to enrollment was very steady going from 18 to 2019 and even early 2020. And as of July 2020, we've seen very change in the New Hampshire CITUS enrollment, but there were large increases in Medicaid enrollment, and those appear to be continuing. So we felt like we couldn't end our talk without talking a little bit about the post-COVID landscape and what to expect for 2021. So these bullets are based on a summary of the recent released 2021 Siegel Trend Survey, which surveys about 70 health insurance providers across the country and represents about 80% of the commercial, fully insured, and self-insured markets. So the couple key points from that survey is that despite grants through the Federal CARES Act and the Paycheck Protection Program, hospitals are experiencing revenue shortfalls. And this has also been talked about in the press in New Hampshire over the summer. So there is some expectation that hospital trends will increase going into 2021, driven by increases in price. Now on the physician side, physician trends appear to be that they'll be driven by increased utilization as a result of several possible factors, including pent-up demand, medical complications as a result of previously delayed treatment, and perhaps also continued use or increased use of telehealth. And pharmacy drugs are expected to continue to increase on the unit cost side, especially with specialty pharmacy, including price increases for existing specialty drugs, but also the high cost of new drugs. And then lastly, what is unknown? So these bullets again are a summary of some of the points raised in the 2021 Siegel Trend Survey, also a recent McKinsey report. Those are both cited on the bottom of this slide. But I think any article that you Google right now related to COVID and what's unknown and what's expected will mention one or more of these points. So pent-up demand, again, what is the impact of services that were postponed from 2020 into 2021? Future COVID-19 expenses. So this is a broad category, including costs related to development of new tests, new therapies, vaccines, but also any unknown long-term costs related to future complications for those who recovered from COVID-19. Next, costs of delayed care. So those with chronic conditions who delayed care during the shutdown and subsequent months, what is the impact for those people? Overall impact on economy. Will there be an additional surge? Will there be additional shutdowns? And what is the impact on unemployment on the health insurance markets? And lastly, behavioral health. So given everything that's happening in our world, will the need for behavioral health services increase? So I'm going to end there, leaving everyone to think about these very complicated issues. But the full preliminary annual hearing report is available on the NHID website, and this provides even more context and additional information beyond what I presented today. And on behalf of the Gorman Actuarial team, we just want to thank the NHID staff and all the New Hampshire insurers in their efforts to pull together the data and information that went into this presentation and report. And now I'm going to turn it over to Don Gorman, who has been collecting questions throughout the presentation, and I will do my best to answer those questions.
Thank you, Jen. We do have a handful of questions here for us. The first one is for the definition of small versus large group And the way that we've defined that is the small group market is defined as businesses with 50 or fewer full-time equivalent employees. Large group market is composed of employers with greater than 50 full-time equivalent employees. The second one has to do with the categorization of specialty drugs and the designation of specialty and non-specialty. Basically, we allow the carriers to provide that information to us using the definitions that they use. So we do an annual hearing survey, and in that report, they provide the data to us. And Jen, you can go into this a little bit more in detail if you like, but basically we leave it up to the carrier to decide those definitions.
Yes.
Okay. And then the third one says that there was very little information provided about member cost sharing, and they ask if there's any breakdown of deductibles, co-pays, cost sharing across the markets, and how New Hampshire compares to other regions. So for the first part, yes, Jen mentioned that the preliminary